Hi guys, welcome to my channel. This is Friday's Trace. I am your cryptocurrency and forex analyst. I'm from Africa. I'm one of the best financial analysts in Africa. You can actually verify it from my analysis and all that. So today I'm going to be discussing about Bitcoin USD. That is Bitcoin for you. Bitcoin is just one of the major cryptocurrency pairs globally, and is actually making a lot of millionaires out there. So it's left for you to either join the queue and then know what is happening in the financial market. And I am willing to hold your hand, tell you all you need to know about the financial market, tell you the secret of the financial markets, just like I've been telling you always. Like I told you earlier now, I told you that Bitcoin will be going down, and I showed you everything that will happen in the financial market. So today I'm actually here to prove to you that the financial market is actually built on certain algorithms. There are algorithms that controls the financial market. It's not built based on buying and selling pressure. And I will confirm it to you today, and I will tell you how it is booked. Recall that in my previous video, I told you that Bitcoin will be coming to this place just like this. Just mark my words. If Bitcoin do not come to this place, I'm going to be betting dollars 1,000. If it fails to come to this place, you come. Just remind me of it, and I'll, I'll make that $1,000 available for anybody. So guys, follow me up. You can actually join my mentorship program. I have a mentorship program where I actually hold your hand. I hold your hand and tell you what is happening in the financial markets, and you'll be able to understand in details everything that happens in the market, how it is booked, and how the order flow. I will show you everything, how it is booked. So today I am actually going to be analyzing the markets. I'll do Bitcoin. After the Bitcoin, I will do GBP/USD. So let's go for the Bitcoin. This is 4 hours time frame. Recall that I told you that the market will be coming down to this place. There are certain things that I may not be able to expose in this lesson, because this is just a free class. But if you want to know everything, then you join my mentorship program. I'm going to be dropping my WhatsApp number below this video in the comment section. Well, I'll drop my WhatsApp. Just chat me up on WhatsApp, and you join my mentorship. So let's go. This is 4 hours. Recall that the market is in a bearish trend. I told that this is just liquidity. Let me be doing this. This is just liquidity. Like this place, the whole of this thing is liquidity. This place and this place is just liquidity. The market books based on certain algorithmic sentiments. You see this particular place, whenever you have a V pattern like this is a V pattern. Whenever you have a V pattern like this, just measure from here up to here, bring it down. That is where the market is going. Nothing stops it. If you bring it down, you see that it is actually in this rectangle. That's how the market is built. I'm going to explain it in details. Now, having this this is what you have. Recall that this same thing, this same V that you are seeing in this place, this same V, it is the same thing as this same V. This one, and that one is the bigger V. You have another small V here. That's to show you that it has actually completed that circle. Now that you have this, let's go to the lower time frame. Recall that in my last video I was teaching about dealing range. So inside the dealing range, you have something like this. Recall that I told you that anytime you have a break of structure, this was the previous high, this was the high, this was the low that created this high. This particular place was the low that created this particular place. Now it failed to break a new structure, meaning that this particular place is now the new dealing range. This is the dealing range because it failed to create a new structure. Now, having this as a new dealing range, remember that you having this as the new dealing range, if you have this internal liquidity, this is external liquidity, right? Now, coming down, if you flip this the other side, this place becomes 1, this place becomes 1, this place becomes retracement, this one becomes 2, and you see this particular place, it returns to this place. Supposedly, this is supposed to create a new high and break a new structure, but it failed to break the new structure. So this particular place now becomes liquidity. This is the resistance now. This is resistance, this is resistance. Now this place becomes support. Now, having this as internal support, let's say retail traders will begin to to look at it from this perspective. Now, there are arrays, there are PD arrays, we call them PD arrays. In trading, we call them PD arrays because those arrays are sentiments as to which the market is booked on. Now, having this as your PD arrays, that you have premium, you have discount, and then you have mitigation range. That's the center of the whole thing. Now, if you take this particular place, take this and take this. Let me take Fibonacci and do it briefly for you before I go into the main class. If you take this and take this, take the Fibonacci, this is what you are going to have. This is what you are going to have because this is the new range. This is the new daily range. Recall that I told you that whenever you have a new structure, if you look at this deeply, you see that this thing broke this structure small. So this is the new daily range that you are dealing with. That is why I'm marking from here to here. Now, having this as your new daily range, if you take this thing and divide it into two, this is what you have. Look at the 50%. Look at 50%. It's like it's here. Having this as your 50%, what will you do? We call that 50% measuring range. There are some things I may not be able to explain deeply in this class because this is just a free class. But if you want to be conversant with what is happening, you can actually chat me up on WhatsApp. I'm going to be dropping my WhatsApp number below this video, where you chat me up on WhatsApp, and I'll actually discuss with you and you join my mentorship program. Just $1,000. It's not big. Just $1,000 I'll be able to join my mentorship program, where I hold your hand and you'll be able to interact with other of my students in my inner circle, where we discuss everything about the financial market, and you have all you need to be successful in the financial market. Now let's go. This is now the middle. This is the middle that we're actually dealing with. Having this as the middle, having this place as the middle, I can actually even my own eye, I can actually look at this and be able to even separate this particular place now. Now, look at the sentiment of the market. Some retail traders will be looking at this market and say, now the market has started pulling back. The market is still in a downtrend. This is just a retracement. The market will come to this place. It's likely the market will come to this place. The market will come to this place. From here, you have something like this. You may even have something like this. If you have this, what is it telling you? It is just telling you that you have this array. You have this array. Hold on, let me delete this thing and explain this in detail to you. You have this. When you take this particular middle range, this is the middle range. This is the measuring gap. That is what we call it. This is the measuring gap. This, you still have another breakaway gap somewhere here. This is the measuring gap, where you have, if you take this and divide it into two, it will still give you this range that I mark here. Take this thing, take this thing, take this measuring gap, divide it into two, it will give you this range. That is for you to know the target where you are going to buy Bitcoin, or where you are going to buy your Bitcoin. So for those who are saying that the bull run is still in effect and all that, the bull run is in effect, sincerely. But then you have to look at the retracement. Where will you buy the market? Because in every business one is supposed to know where to buy, one is supposed to know where to sell. Because the principle of marketing, in the principle of demand and supply, it says you buy low and sell high. For you to make profit, you have to buy your commodity at a very low price, then sell it at a high price, make profits. You understand? So if you are able to buy Bitcoin at this particular stage and even sell it at this retracement, this same 50% range, you see that if for instance, if Bitcoin comes to this particular place, because that's what we are expecting. If we have this, or even have something like this, it come into this range, and you are able to buy Bitcoin at this particular stage, sell Bitcoin to this particular stage, you see that you have made a whole lot of money. For instance, you buying Bitcoin at 45k within this range, 45, 47, 45, and more than 42 within this range, and you are able to sell at 56k. You see that you have actually made a lot of money, and then it will retrace again. How will you know where it will be retracing? You can actually take up your Fibonacci. At that stage, you take up your Fibonacci and measure from here. Recall that I told you that when you are buying at 50% is premium, is a mitigation. That is the center stage of the market. If you buy at 50%, anywhere from 50% here, if you are buying Bitcoin from 50% down, to 100%, it's at discount. Anywhere, if you are selling anywhere from this up at this particular, it is a premium. That is, you are selling high. That's the principle of demand and supply, which is, it is effective in anything you do. Now let's take it this way. If you are buying anywhere, if you take this particular 50% of this range, which is here, if you take this particular 50% and you are able to, if Bitcoin hits to this particular place and it returns, this is supposed to be a pullback. Anywhere outside this 50, if you divide this 50 into 2, you have 75%. That is the principle of what I'm actually going to be telling you. If you are buying this particular coin from this particular range, recall that this was the previous low, you begin to have higher low, you begin to have something like this, it will hit 75 again, you begin to have something, it will be the this, now this becomes the internal liquidity. This particular place will become the internal liquidity.